Hello, ladies and gentlemen, and welcome back. The question everyone's asking right now, when will this market stop? The rally has been significant, and of course, a lot of people are now calling that the bottom is in. Is that so true? Well, there are certain similarities that have happened now with the S&P 500 3 to 4 times in 2022 that signal that maybe we need to look under the hood of these markets. We've got dollar index, we've got, of course, stocks, commodities, and cryptos all coming your way in today's video, along with something that might shock you. See you soon. Well, welcome back, everybody, to the Daily Show. We're going through the lead information right now, the correlation that you need to know about markets, and of course, then looking at the big key levels that we all need to be watching. So what goes up must come down, of course. With all great asset bubbles, generally, there is a huge decline. Bitcoin's one of the biggest asset bubbles in terms of percentages, and we're all feeling the effects of the FTX scandal at this stage. It's going to potentially roll into other markets as well, so it's worthwhile knowing that. But whether it's gold, China, US housing, biotech, what this proves is that even with technology, bubbles can still happen. Always be on the lookout for those things. And remember, it's when people stop calling it's a bubble, that's when you really need to be the most fearful in markets and starting to look for the signs to potentially get out. What about inflation? Well, we'll be doing a special later on this week on inflation about the yield curve inverting. That is the US 2-year versus the US 10Y, and how when that starts to flatten, it could be telling us that inflation has hit the peak. It is now looking to turn around, and that certain sectors may be doing better in the markets. But what's unique about all these post-World War II inflation numbers is that when they're spiking up, as they start the downtrend, which we have now started pretty much here in 2022, we tend to have an incredible decline in the inflation numbers. Interesting. Goldman Sachs and others are now predicting that it will be down significantly in 2023, and potentially the soft landing proposition may happen. I'll go with, I think there'll be a bit more kangaroo market before then. But of course, that is the general thought consensus coming through in the market rhetoric, in the news, in all of those things. We want to avoid that. We want to be looking at the data and the hard facts as much as possible. The dollar index after the DXY has declined more than 4% in 1 week. We don't have too many data points, but we still have quite a few. And what it shows you is that over the next 2 weeks to 2 months, the US dollar tends to actually never be positive over that period of time. That also leads into our theory that if the dollar index actually weakens, and it may not weaken just right yet, and we'll look at that soon, if it does weaken, then potentially the markets may find further strength. You'll notice here, for the start, it's more of a coin flip. Then it starts to get a little bit more statistically relevant towards a bullish market. That is, if the market does drop here, is it going to be met by bullish demand? Let's say if it fills the gap that we saw at the start of the video. That's something we'll be talking about later on today. Percentage of returns for after the dollar index has done this. Now, here's where it gets interesting. Correlation with other markets. Notice some of the ones that tend to do incredibly well out of this period of time. 39.6% for consumer discretionary. We also have incredible returns for things like commercial services and supplies, consumer durables, and apparel. So the next 12 months, if we are seeing a very similar statistical time with the US dollar and the industry groups, we could be getting recoveries in some of the most beaten down sectors in the S&P 500. Now, that's of course a little bit early still, but if we start to see that trend come through, we need to watch under the hood. Remember, there are fearful things happening right now as well. Meme stocks are one of them. We need to discuss that today and their correlation with 2022 and pullbacks in markets. But that's something we need to do. Correlation and looking for the signs of recovery underneath the hood. Conditional seasonality, as we know, with all bear market years during these types of periods for the S&P 500, it's usual for a bit of a spike through the middle of November, and then potentially going into that sideways kangaroo style market. Will it be the same? It's a point to definitely note. We also have a Twitter, and of course, if you're going to be following us, I suggest that you do go and follow at FX Evolution on Twitter. We'll be posting some weekly reports there as well, moving forward, some pretty exciting announcements, and you'll only be able to get those if you're joining us on Twitter, so definitely go and join that one. Q3 earnings 2022, the earnings beat data. What's going on there? 56% beats. This is a really bad earnings season. Of course, the market has not got high expectations either. So most companies are missing during any normal year. That is shocking. So this is the chart I want to start off with as we drive into the key levels we should be watching. The correlation between AMC and I guess you would say FOMO coming into the markets. We saw a limit up on AMC in the last 24 hours. Effectively, that means that we're kind of hitting these critical points where the market's getting a little bit FOMO-ish. It's starting to get greedy. Now, the way you can tell this is if you load the SPX on top, the S&P 500, and you think about some of the biggest pull-ups this year in terms of rallies, notice a lot of them are coinciding closely with rallies in the FOMO, that is in AMC, in the squeeze stocks. These only seem to be able to get out and start going ballistic near the peaking periods. And that's something that I think is very important. We're coming up to and approaching an incredibly key point for the S&P 500 and the US dollar. If we do reach it and we're seeing these stocks get out of control, it's another sign that we have to expect a pullback to occur after the next couple of sessions. What about the VIX? Is that agreeing with us? Well, the volatility index is dropping lower. Our general theory at the moment is that there still hasn't been a 45 plus VIX. Traditionally, when you're in these types of bear markets, usually you see a 45 plus VIX. In 2008, the main kind of lead here was that we had a very low VIX, which didn't really go past that 35 level, similar to 2022, then dropped down and then, of course, blew up massively during that contagion effect. What types of things could FTX get through into creating contagion? Are there some other issues with banks? Remember, all of a sudden, we're not hearing about the European banks. We're not hearing about the pension funds. We're not hearing about all the negatives. It's all a positive story right now. Inflation's killed. That's at least what people want you to think. What about PCC, put call ratios? It's always important to follow the options, especially during the $1 trillion expiration weeks, such as we're finding right now. And we know that PCC has dropped significantly down. What that means is that the number of puts out to calls is starting to drop into those areas that we've seen consistent. Again, if you don't believe me, let's have a look here together at the S&P 500. Often we've correlated fairly heavily here with PCC being at extreme highs, that is a lot of puts out in the market, and the lows of markets being met. At the same time, when the PCC has dropped too low, we've been close to the highs. Two levels of pretty strong correlation to show us that we need to maybe pump the brakes and say, okay, let's look at this market objectively. Are we feeling FOMO? Are you starting to feel that? Let us know in the chat. Are you feeling FOMO? Are you feeling greedy? And is the fear dissipated incredibly quickly? It's amazing how fast these things can happen. Humans, we make decisions very quickly and we change our opinions even faster. Sometimes that's important, but we do need to see the forest from the trees. US 2-year yield, of course, sitting still around 4.389. It actually started rising a little bit while the market was sidewaysing through the last session to slightly down. If we look at the forward yields, still the same story. By April of 2023, 4.86. By September, about the same. And then we don't get a rate cut until realistically December of 2023. Remember, it was flatline the whole year. Now it's kind of flatline with a step and then another step in 2024, showing us that the economy will be sick according to the bonds market, but at the same time that the Fed will have to come in and support and potentially will get inflation. The high yield bonds don't seem to necessarily be happy nor sad at the moment. They're not dropping as the market's going up. That's usually a great sign to show us that the markets maybe are topping off or at least finding that key resistance. That hasn't happened yet. We're continuing to watch. We'll report if it does change. Let's go over to the dollar index here and how it's coinciding with the S&P 500. So first up, I want to just point out this little area around here. It was previous resistance, and then it became a role reversal support, but it also probably held a few orders. We're seeing the dollar index finding some structure on this, and you'll notice I've got a little alert set up at around that 107.15. And the reason we have it there is because if the market starts to rally, it moved incredibly quickly the previous couple of sessions, and that forced a mass sell-off, a mass break of structure, as we call it. When that occurred, the market may not have got, let's say, fair kind of amount of trades and liquidity in. So just because it's a giant candle doesn't mean there's a huge amount of trades in there. What we're looking for now is potentially a pullback into maybe a sell-off later. And that's why I said the DXY could easily strengthen here. The stock market could drop. All of these things could occur. We're at 1 point. The second point is 105. I'll let you guys look at the charts. It's pretty damn obvious why you would be focused in on that zone. What a critical area for the dollar index. This will coincide well, I believe, with 4100 on the SPY. All markets are connected to some degree in 2022, so we do need to understand all these key zones. The euro is similar. Of course, what happens on the US dollar, if it's strong, the euro should weaken. We're up at that previous level of supply for the euro. We've also got some pretty strong levels a little bit higher. This is where we're looking for turnaround stories. Do we have one? Not quite yet. As we scroll down through the timeframes, I'll go to a 15-minute just to show everybody. You can see the kind of structure forming here. Is this accumulation for an upward move, or is it distribution for a downward move? Well, it's going to be a lot around the breaks on each side. And that's why I've straddled this particular market, waiting for the signs. If we break to a new low, I kind of expect us to rally somewhere around in that area. Then you would maybe potentially see some sell-offs. If we break to a new high, then you have to think that we're going towards that next level, which sits around that 105.80 area. So some strong stuff going on here with the euro and the DXY. Again, they're linked. The good news for market bulls has to be the commodities story. Copper doesn't break out usually for no reason. There is clear thought process behind, of course, the stability of China. We're seeing packages getting put there, COVID zero policy changes, all sorts of things, meetings between the big leaders of the world. All of this stuff is a good news story potentially for commodities. We saw copper break out massively. Pretty much iron ore, all of these kind of markets have been doing really, really well. And if you've been in those, congrats. They've been absolutely excellent sectors over the last couple of weeks. Now, with copper, if it starts driving back down, especially if it makes a new low underneath this level, I'd be incredibly concerned about the economy. If it does so and the stock market's not on a new low already, then we have to be very worried. So copper, they call it Dr. Copper for a good reason. Gold, super strong. It likes stagflation. It also likes lowering of rates and yields. If we have seen the top of the terminal rate, that is the top of where we believe the yield will be in the future, that April 2023 level, then gold could be happy. And we've talked about this now for realistically 2 weeks. We were probably one of the early channels to really get wild on what we were seeing. And when we had that confirmation of the third wick rejection, it showed us that there should be strength. GDX also showing good strength here. Even pullbacks, you would have to think gold is going to be met by bullish demand. We'll do a special on gold though again this week. We've got a couple of great shows coming at you, so make sure to subscribe for them. I think you'll find a lot of value in those ones. Apple, meh, it's sitting around. I say meh because what are we getting from this? It's not really telling us much, and that's a bit of a problem for it. But where things do get more interesting is probably Tesla. It dropped 2.56% on the close. It created a long leg doji. You'll notice a lot of long leg dojis, indecision candles. It's waiting for the next move. Which way will that go? Well, hopefully we'll find out over the next 24 hours and get a bit of an idea. Just remember, Tesla fans, like we've been talking about this 180 level as a strong buy level. And we knew that was more likely than not to get to it. But because of the stuff's going on with Twitter and everything, if it does fall through this area, you notice I've not got another alert now on a new low. There's very little holding it up in between this zone. So you've got to think at that point, you're going towards that 136, potentially 120 area in these markets, that drop off effect that gets pretty nasty. So be careful here on Tesla. It's at that level where I could see a lot of people wanting to buy it. If it does turn here, though, this was previous supports becoming, I guess, resistances. It's filled kind of that gap that was left there, and it's starting to show weakness. And this is a weaker stock at the moment in the markets than many other, consumer discretionary and many other stocks in general that are in the growth sector. Let's have a look at XLY, XLP. Certainly a neutral day for it. 3 strong days, though, of returns for this sector. As we know, this combo tells us the American consumer. That's 1/3 of the American economy. 2/3 is services. So it's looking okay. We want to see this continue to drive higher. And if it gets past something like this, you'd have to think the bottom was in for stock markets. This is of course, yes, that will be partially after the fact, but this is a very good sign if you continue to see consumer discretionary beating out the rest of the market. You also want to probably see this occur, which is that the Dow, the old economy versus the US 500, arguably the newer economy, or more of it made up into it, is doing better. Now, if you think about the last couple of years, of these combos, look at what happened over all of that kind of 2019, 2018 into 2022. In general, the Dow should not be outperforming the US 500 if the growth stocks are doing really, really well. That hasn't been the story of 2022. They've been going defensive. So this is a great combo to see whether we are potentially bottoming. The current rally has been all about the old economy and not enough about the new one. CPI has changed that. Does it continue? We want to be watching that one as investors and as traders around the world. The DAX, bring that one back just quickly here. This is the German 40 market. We take a look at this chart. We know where we're setting alerts, obviously through this high. It hasn't quite reached it. It's gone a little early here, potentially to the weakness side, but we do know that we're finding an area of previous supply. We're now in that start of the area. So for DAX shorters or for people that are looking for shorts in markets, these are critical periods. And certainly we're getting into that territory where options players and others may say, you know what, yes, I haven't seen a change of trend yet, but this is the zone where I think profit taking may occur. Let's have a look at the US 100. Let's look at the NASDAQ here. We've had that case scenario of 12,000 for a little while. 12,000 should correlate with 4,100 on the SPY, which you'll see is a very important point for us in these markets. It did show some weakness for the first time. It's broken out and it's looked incredibly strong, obviously leaving behind a whole bunch of gaps. Let's look at the smaller time frames. Let's have a look at the 1 hour. So we made a higher high in the last session. We have not yet made a lower low on things like the NASDAQ. We haven't also seen it break under either of these levels. That's what I'm looking for. I've of course got alerts there. If you're looking for the bearish side, that's the kind of way you want to do it. If you're feeling bullish, potentially somewhere around that 11,550 should hold some demand. So even if the market comes down here, you'd have to think there's a reaction off that. If it just keeps plowing down lower, that would be unusual. And then you'd probably expect something like this to occur, and then probably to the downside, filling in some of these huge rallies, getting the liquidity. Remember, Wall Street, if they are going to push this thing up and they're going to say, okay, yes, the bottom's in, yes, I want to go long, they probably want to get more orders into the markets. Let's now take a look at the big one. We'll use the SPX just to highlight something here. Firstly, there are two major gaps. They are super wide from each other, but now the gap to the downside is further away from current price. So we have that 41.10 unfilled gap due to, I think it was the inflation number actually. Now we have a new inflation number that's sent us up. Both of these levels you would hope to eventually get filled. So if it keeps driving higher and the market gets up to here, when we correlate that with what we're seeing on these markets, which is a huge trend line that's been occurring, this is one of the best points we've seen in 2022 to show us potential turnarounds. And we have something like an AMC getting wild against the SP 500. At the same time, we also have, some other warning signals, the PCC options, all those types of things. You have to be paying attention here. But have we just seen the start of a little miniature turnaround? Let's go down to the smaller timeframes and understand a little bit better. So I did get an alert, and one of those alerts was we broke to a new low here. We've seen some weakness. We are still not underneath the level that we were talking about in the live stream for Monday. That is pushing underneath this zone here and then potentially starting to slide over. The market's overall only small time frame now bearish. The 4 hour, the 2 hour, all of those real time frames are still, relatively speaking, bullish. And of course, 4,100, 10, 20 is still possible. I'd be looking for weakness over the next 24 hours. If that did occur, then we're looking for pullbacks to the short end. And that's not necessarily a short all the way down to zero or anything like that. It's just a short for the time period. It's very, very tough to know whether this is still the low in these markets. We don't have enough proof yet. And we do like to look at proof from the stats, from the sectors, from all of those things. If we start driving down and consumer discretionary and others are absolutely beating the market on the way back down, that is, they're not falling as much, that's usually a relatively good sign that potentially the market's rotating correctly. It's doing the right things. So some weakness here for bulls. All you're looking for is a new high. And I would think if we make a new high, that may solidify some further rallies to that 41.10. It's not really a high reward trade, but it kind of shows you that we've done some accumulation here. We've kind of trapped and put a lot of short positions in, and then we squeeze them through to that eventual, hopefully 4,110 zone. Let's have a look at the options. We'll refresh this here. Basically, this is big options week. There is trillions of dollars at stake. You can see as we scroll through, especially when we go to the 18th of November, look at these calls starting to come through. Real call action now appearing for the first time in weeks. We've seen calls jumping into this market. 400, bang, huge strike. 390, also huge strike. Maximum pain 382, current stock price 395. That would push to the most profitable concept for Wall Street to get down by the end of Friday. This is the one that you usually pay attention to. 4.837 million options. Wow, that's huge. You know, it's a big one. And all these poor puts, they're sad face right now because they're going to lose. This couldn't have been better for the market to do what it's done. It really is playing both sides. It's pushing in tons of calls. You know, will these 430 calls expire worth anything? Probably not. I mean, you never say never, but suddenly people are getting incredibly optimistic and thinking the rallies can't stop and all sorts of things. So yeah, these option strikes are well worth viewing this week. Definitely follow us along as we cover those. Crypto is recovering. It has found the low and bounced off that. Not enough to show you that we're out of the pain train yet, but certainly crypto doing better. Do I like it? No, I think still the correlation between negative previous periods is still very strong. And if the stock market is to turn to the downside, of course, you would have to believe that crypto is at the forefront of that decline. This is the story. This is the negative kind of black swan event with FTX. And even in the smaller timeframes, let's have a look at it just objectively. Do we have a turnaround? I would have liked for it to take the low, then rally through. It didn't do that. So it could all be just part of, again, distribution before another drop. For people trying to sell it, you can already see a reaction here. I'd be thinking also in that kind of 18,000, 17,600 area should hold some shorters. So yeah, crypto looking interesting, but not really the way that we'd be liking to do it at the moment. I'd like to see it drop further and then potentially find some strength. Empire State Manufacturing Index and PPI are coming out Tuesday just before the market opens, 8:30 a.m. Could be another catalyst for some large movements in the markets. Not as big a news as others, but PPI is certainly considered quite heavily. Then we find Wednesday, November the 16th, some big news here. Retail sales, core retail sales. What's happening? Are we getting demand destruction? All these questions, the data-driven Fed, and there's data coming out. As we know, this will move markets. We then get the Philly Fed Manufacturing Index on Thursday, November 17th. And that's the main news for the week ahead. So certainly quite a lot of information coming out and well worth paying attention to. So just before we finish today's video, I just want to do with the draw for, of course, our free competition prize. There are 4 prizes here, and I want to say a big thank you to everyone that has entered into that prize. We'll be doing it from the bottom up. So that means the first name that we read out will get the Ultimate Trading Masterclass and so on and so forth. And I wish each and every one of you the best. So without further ado, let's start drawing these prizes, of course, using a random name picker here. The first prize will go to, of course, the 4th thing, which is the Ultimate Masterclass. So that's for Tauhid. I will check that out. 900 of you basically did enter this competition. So thank you very much for doing so. So congratulations to Tauhid. I'm not sure if I'm saying your name correctly, but we'll be in contact with you over the next 24 to 48 hours via email. And obviously you can claim your prize. Let's now pick the second person that wins, which is winning our 3rd prize here, which is Durgesh. Congratulations, Durgesh. Fantastic that you've won. We'll be in contact with you soon. Let's pick the next person's name. This is, of course, to win they're pretty close to the first prize, but not quite yet. And that's Leo Santos. Congratulations, Leo. And the big one, the one that will be doing the group mentoring with me. Let's find out who's the winner of that. And it is Andy Locken. Congratulations, Andy Locken. So we'll be in contact with you guys over the next 24 to 48 hours. Please respond to us via email. And then what we'll do is we will send you the courses. For the person that's won the group mentoring, congratulations. If you're ever interested in finding out more about our courses, you can jump on over to fxevolution.com. And of course, they were some pretty sweet prizes. So congrats to you guys. Remember to subscribe, smash that like button. We'll see you in the next one. Bye for now.